Good evening, guys. County Tortoise Capital Nightly Strategy Podcast for January 18th, 2024. We'll start with the hybrid swing trading portfolio, as always, with Alcoa on 30-minute charts. This is our 5-day look back here in the blue shade. This yellow shade represents today's price action on 30-minute bars. This long red sloping line is the Bollinger Band mean of the 30-period Bollinger Band, the center of the river. This orange line and those turning points represents the VWAP, volume weighted average price. These lower peaks, that's where the peak of the RL10, which is our proxy for price, gives us the dimensions of the moves. Here was an RL10, for instance, it came down to here and then has trickled sideways until this point. So we would classify that as a sideways chop, very tightly compressed. This is your directional move, sideways chop, gap up, and then fail. So that's the kind of day it was in Alcoa. And after the opening, here's where it closed. It opens and runs up all the way to here, starts rolling over and selling off. It sells off one risk box, so we enter short with a standard risk. And that price drops all the way to here and then stabilizes the rest of the day. And when it reaches the southern skin of the dragon and near the end of the day, we exit. For a 5R move on the intraday movement and no overnight risk. Lather, rinse, repeat. AI, gap up, sell off, 2R, edge of the dragon. Caterpillar, this was part of the great sell-off this week. You see it starts selling off, speeds up a little bit, gets a little faster, big drop off, and then stabilized yesterday afternoon to close right here. It gives one little run up, one little run down. On the second time that it bounces, held support at the PSAR, crossed the VWAP, rising dragon, 1, 2, 3 entry, entered as it crosses the VWAP, standard risk. And then it does nothing but enjoy the afternoon recovery. And I decide to hold that overnight. And we have a 3R cushion against 1 unit of risk. And that gives us a little cushion. So tomorrow, what am I hoping to see? Well, it closed above this gap down. This is where it opened way back here and has been monkeying around. It closed above that gap. So there's no resistance from here until it hits 287. There's nobody in here that bought and failed. Everybody that bought in this whole region is making money right now. And the first sign of resistance is back here. That's where the guy that bought right here and has suffered in silence all the way down to here, that's where he gets his money back. That's the first place that he can be tempted to sell. So there should be, according to this theory, uninterrupted price rising as it climbs that price ladder tomorrow to continue the momentum from this afternoon. Now, that's a hypothesis. What if it starts going up that ladder and only gets halfway up that ladder and starts to fail? Am I allowed to be surprised at that? No. The theme of the last 5 days has been selling down into here. So if it climbs that high and starts to fail, I'm going to make my money and just say, you know what? I gave you a fair chance to get up the fair value. It didn't. I'll just cash that win and I'll exit at 284 tomorrow. Now it's only at 282. So the first thing that I got to see for this to work tomorrow, for that whole hypothesis to work, and it's nothing but a hypothesis, it's an experiment, is I got to see it break higher than today's high. And I have to see it moving towards 287. And once it does that, I'm looking for places where, for reasons unknown to me, I don't even have to, but if it starts failing, that's reason enough. I don't need to know why they're selling. I just need to know that they are selling. And then I have a 3R cushion of market's money to protect me against an adverse gap. But as this starts going up, I'm just making money. And then you decide when is enough enough and it pulls back. And maybe I have some kind of give back plan like that. The first place that I see it them testing is if it comes back into this region and gets to 287 and starts to fail. But if it gets through 287, the next place it could start to fail is here at 290. So now my price ladder of reasonable price action goes all the way to 290, 291. And then the one that tells me all of the selling is over is if that peak of the RL90 does not stop it. So 294 is the real test. If price gets above 294, that tells me that all of the selling was false. That was everybody that could be persuaded out of their position. And that 294 is a signal that it's going to resume its upward move. Which started way back here and got to 294. And the last time that it peaked enthusiasm was at 299. So we're actually buying a quality company on sale at 279 on a company that people were happy to spend $300 on. That's minus $20. That's an 8% sell off. We're buying one of the great American companies, Caterpillar, on an 8% sale. And we have this much cushion from today's price action to justify hanging around and trying for more. So, in terms of the longer term trend, it's above that gap. It starts testing here, and then it's a food fight to get through this and this. That's harder because there was evidence that people were willing to sell at that price level before. But there's some buying momentum. We'll see. That's what makes it a game. But what we have, because we were willing to take a measured risk here after that turning point, we now have 3R of market's money to act as a cushion to make deliberate, rational decisions inside this region. Checker hole. That's the mentality we got to have as a hybrid swing trader. We are combining the insights from the 10-day look back period with the 5-day look back period, with the 1-day look back period, and then looking at things like the 30-day high. Cliff. That's been nothing. The last 10 to 30 days has been painful selling. all the way down. So all we did today was just part of the continuation plan was that it's been horrible. It gapped down, so we shorted, had our standard risk, and it declined. But when it recovered to the edge of the dragon and coming near the end of the day, we just cashed that little piece. That's about 0.5 R. If you don't want 0.5 R, give it to me. We took a shot. It moved in our direction for a while, but there was no evidence of panic selling. In fact, it benefited from the market improvement of the last half of the day. So there's no reason to hold that overnight. So we take our half an hour and just go home and sleep like babies. CVS, oh, the sideways chop of the last 4 days, big gap down, a little bit of a sell, but then a recovery crossing the VWAP, and the whole market was starting to recover. So I speculated in 1 unit of risk, got 1 unit of reward, and I don't want to hold that overnight because you can see what happens to this thing overnight potentially. So we'd cash our 1R, no overnight risk, and we'll just see what tomorrow brings with no directional bias. DIA, also part of the big sell of the last 4 days. Today it's sideways chopped. Today it around lunch or slightly after lunch, it flipped the PSAR. The dragon sloped up. It crossed the VWAP. I buy it in the usual space with a usual risk, and it goes to 2R, and the whole market is going. So I buy a second position, and it closes pretty well. So I'm holding 3R on the first position, 1R on the second position. So I've got 4R on two positions, and I think tomorrow it has a good chance to recover. That's the Dow 30 Industrials moving like a young man in the spring. Disney tried the gap up and go, cashed 2R. It got that high, sold off. So I cashed 2R. It held support and resumed. So I speculated back in with markets money and decided to hold it's gaining 1R. So I'm net 3 for the day. And I'll hold that because I think there's a good chance because it's already testing this. I think there's a good chance for it to be a value play tomorrow with a favorable gap. Just 3 days ago, there was a strong buying interest here and strong buying interest here. So I'm ready to play the higher lows and bet that we're on the side of the angels. That's what a businessman's risk looks like. It is a probability based, statistical based routine decision. Devon Energy next. This thing has sold off with the energy sector very strongly. I couldn't find reasons yesterday or for the first half of the day to buy it, but the whole energy sector started to improve. So I speculated in, and it has a 6-to-1 reward to risk ratio tomorrow, and I'm holding an R in hand. I'm ready to take a risk on that one, so I'll hold it overnight. Emerging markets, scratched. Ethereum, you can't short that one, but you can be short the actual crypto. That was the clearest directional signal to the downside you could want. We just can't trade that in that way in ETHE. But you'll be interested in the crypto. Mexico, we got a 1R win on the routine recovery. Brazil, there was weaker than Mexico, so we didn't trade it. Intel started with a great big gap up and then started to decay. Shorted it when it hit the edge of the dragon and a declining VWAP. This is where the market started to recover. So I got out at the other side of the dragon for an R with no overnight risk. IP, routine short, routine exit for 1R. Real estate, routine short, routine exit at the skin of the dragon for 1R. Coca-Cola, big gap down. Here's where it closed. Sold off to here. Quick sell off and then started to recover 1, 2. And at the as it's hitting the RL10, I front run that skin of the dragon a little bit. I have my nice wide stop in. It's mumbled around for a while, and then here it PSR flipped and caught the wind of the broader market takeoff. So when it cleared the dragon and resistance, and I've got 2R in hand, I add a second position and it closes well. I'm holding that one because I think it has a good chance to get back to the 10-day and the 30-day high in a first burst tomorrow. So I'm holding that one as an overnight speculation with about 3R in hand. Regional banks, no trade. McDonald's, I tried the gap up and go, and that failed early while the market was suffering. So I just cast +1. It sold off to here and started to resume as the market was resuming. So I just put the same trade on, same risk box, and this one followed through. And this one gave me 1, 2, 3, +1 here is net 4 for the day, and holding that risk overnight because it cleared previous peak of the VWAP and is ready to go. And McDonald's, who among us doesn't want to own McDonald's and get back to 300? Look at the buying pressure on that thing and the higher lows. It wants to get back to 300 and new beginnings better than anything. So I like that as a 4 position that everybody that's a pro money manager has to own. Here's a natural turning point in Merck. We saw the low and a recovery and just took the standard PSR flip. It closed very, very well, and we got 2R in hand, so I'm holding that overnight. Microsoft. Tried the gap and go, it failed, re-entered, I'm holding 1R, and if that breaks north on great strength in tech, as we're going to see, tech was the clear winner today, both the Qs and XLK, and that means Microsoft is ready to explode. And that's an all-time high, guys. You cannot be afraid of owning that one, or you're just going to be afraid. It's no place for a nervous person, as Ricky Redmond would say. Marijuana continued its slide. I got a 1R on the usual slide. No overnight risk. Nike, I thought about this trade. I ran out of willpower and span of control. But that's a good value play for tomorrow. We'll see. We didn't miss anything by not owning it here. That has a long way to go to recover. NVIDIA, just like Microsoft, I tried that one scratched, re-entered, and I'm holding that one as a recovery play for tomorrow. Clean energy, no trade. Rivian, the slide continued, captured 2R routinely. The S&P, look at this afternoon move to close very high, pushing the boundaries of the statistical turning points. That has a chance to really be strong tomorrow tactically. Treasuries, the slide continued. I captured an R, no overnight risk. Tesla, no trade. Walmart, oh, trading like a growth stock. Breaks out of the sideways doldrums. Should have had more, but holding 1, 2, 3, 4R, and I'll add to that one tomorrow. Why? Because that's an all-time high almost in Walmart. That's the all-time high, but it's got that long recovery. There's no resistance in this thing until 170. So that's a 5% potential upside if it breaks out of this 30-day box and it's pushing the boundaries. That's your 10-day box, that's your 5-day box, that's the 1-day box. That's where it's headed. That was a prediction, and those are wrong. And then US Steel recovered nicely finally when we zoom down into that one. It benefited from that afternoon recovery. PSAR was favorable when it finally crossed the VWAP entered. It closed well. I like it. We're holding about 1R. Let's take a look at sniper trades of the day. Here's the Walmart trade. That's the long sideways chop around the VWAP. I thought about it here, waited for the breakout above this RL10, speculated in with that standard risk. Sideways consolidation, emerging dragon's second position, 2R. At 3R, I add a third position. Exit the intraday portion for a total of, on the first position, 1, 2, 3.5. On the second position, 1.5. That's 5, plus a half just to pay for the trading. So 5R. And then I decided to hold one swing position overnight, and that's paid for with 5R from here. I take one of those R and just hold the swing position, and I put the other 4 in the bank to fund future operations. That's swing trading one day at a time. That is core and turbo trading with a combination of intraday and swing. That's opportunity trading, looking at the move from winter to spring, summer, and then trading the breakout in the usual way with a measured risk. And then the rest of it is just routine management, watching the VWAP rise. When the VWAP rises that much, that means there was a lot of volume in the buying that pushed Walmart that high. That was non-trivial buying. That's long-term buying Walmart on sale. Here's the S&P on 3 minutes. If you're a futures trader and you're trading the ES, you notice at 1:30 p.m. Eastern, it reaches a maximum fail below the VWAP, and then a reversal with the PSAR and crosses the Bollinger Band mean. And you realize, of course, that you can put a tactical trade on that says, if I take that much risk, it's a routine move just back to the VWAP, and it will often move as far above the VWAP as it moved below the VWAP, because that's how much power they have. So I could just draw that as a reasonable upside target, and then I could see 1 unit of risk, 2 units of risk, 3 units of risk, and now I have a 3-to-1 reward to risk ratio. And then if this fails, I can just enter as a collapsing dragon on the failure trade. I'll take the 1R hit and then just get in line with what looks like the primary trend. Check or hold. That's what situational trading with statistics and the VWAP and simple geometry sets up for you. There's the second leg up. So if you're a futures trader, you could have captured with one contract. Let's just do the math on this one. For those of you guys that are interested maybe in trading futures, some of you are. Your entry was at 473.23, and you let's say you exited here after this thing rolled over and penetrated the VWAP or the PSAR. So you get out at just for sake of argument, 476.23. You captured 300 points on one large regular contract. Oh, that's one mini contract against one unit of risk, where 23 to 53, you're risking 20 points. Call it 30 points. On the mini contract, that's a $300 risk. You captured 300 points on a 30-point risk. The math is pretty compelling. And no overnight risk. The important point is to learn how to rapidly estimate the size of reasonable moves. All this was a move away from a very stable VWAP. Look how stable the VWAP is. That's the fair value all day. And this was the maximum excursion away from it. They were able to push it from here down to there, and then they were able to bring it back to the VWAP in this amount of time. It took them that amount of time to move it that far in two legs, leg one and leg two. Here's leg one recovery. And now you're just betting on the first move back to parity, and that's your 1-to-1. And then you're saying if they moved it this far, they could move it that far. And if they move it this far, they might do it twice. So you can calibrate targets. Target one is back to the VWAP. Target two is first VWAP extension. Target 2 or 3 is if you get a double scoop to the upside, and almost to the penny. So what's that look like visually in Devon Energy in the morning? Here was yesterday's close, and that was yesterday's closing VWAP. So today it gaps down, where it was. No, it gaps down and sells off all the way down here to the peak sell off of at where the RL10 turns. Where the RL10 turns is where the PSAR flips. So we know that's going to be an important price level all day. And then the VWAP goes from here all the way down to here as part of that sell-off. And then it flatlines. So all of the future buying has to be factored into that VWAP. So that's a pretty good estimate of where the VWAP is going to close the day. So now I see here's the RL10 belly, and here's the next lower move in the RL10, and then here's the next lower move in the RL10 when it sells off. And the common feature is rising lows. That sets conditions for K2 trading because I have rising lows where the RL10 turns. That's the statistically significant point, not the fat tails, but where the regression line turns. Those are the crucial statistically significant turning points. So I have rising lows. Now, what do the highs look like? Highs look like here. That's where the R10 crosses through the VWAP and gets to a peak and then sells off. It gets through, it goes to here and then here, crosses through the VWAP, touches the VWAP, touches the VWAP, touches the VWAP. So now I'm just marking all the places where the RL10 turns. And now I have rising lows. Now, if this gets through the VWAP, I now am entitled to have a rising bias. And the price levels that are significant are If it breaks through this resistance, it could go. And if it breaks through this resistance, it might also break through that resistance. And so if it gets through here, it can really go. So if I am looking at this sideways channel here, consisting of the last peak and the most recent bottom, I now have a sell-off, which creates an opportunity to trade to the far side of the channel. And if I decide to enter here, then I can use the bottom of the channel as my risk, or I could use this RL10 as my risk. And then I have a reasonable tactical move to the top of the channel. And if I enter here, when it crosses the VWAP, and if price simply moves up into here and starts to fail, I'll just get out of it and be able to capture that little gain versus that much risk. And then I have a micro gain and I just won't lose money. That's fine. But if it gets through here, now I can start licking my lips and say, it could go back, now that it's peaked above this, it might go back to the high of the day, which would be a really nice trade because I would have 1 unit of risk and I could have 2 to 1 to the high of the day. And then this was a gap. If it gets through the high of the day, it might simply go to yesterday's closing VWAP or PSAR. And so it can get to here easy. And if it just goes to yesterday's VWAP and back to long-term fair value, I'm going to have a heck of a trade because I'm going to have a 4R trade. So if I'm thinking about this channel as a trading opportunity, I'd like to see it come down and test the bottom of the channel, but make a higher low. It's subtle, but it's there. And you can see it because you're looking at the RL10. If you're just looking at price, that just looks like a noise channel with no differentiation. But if you put statistics on it, you realize that it is quietly testing the oversold portion of this channel, and it passed the test and is starting to move higher, which now makes this crossing of the VWAP a buying opportunity with 1 unit of risk and 4 units of reward, which if I only get half, I'll get 2 units of reward. And if I only get 1, at least I get 1 and I didn't lose money. So the only thing I really have to do is if I can buy it in here, if it starts moving up towards this region, all I have to do is get my risk above my entry and I won't lose money on the trade. That's my science project. That's how I get my risk out of the trade. Check or hold. I buy it when it crosses the VWAP. I use a standard risk. There's the PSAR flip. Why is that the PSAR flip? Because the PSAR always flips to where the RL10 turned because math. That's where the RL10 turns. Mathematically, it must. So now here it is inside that circle. The only thing I have to do, now that it's inside this circle and it's testing this, the only thing I have to do is get my risk from here to here. And now I'm not going to lose any money on that trade today. And I'm actually giving it a little bit of wiggle room from here, from my stop up to the price where it currently is. I'm giving it room to work. Now, you can decide how much of that money is yours and how much of it is room to work. My job is to teach you how to lock in no lose plus dinner for two and teach you to recognize this as a 4-to-1 opportunity as a frame if this thing works, and how to get your risk out, and how to recognize some intermediate price targets that will give you some management information. And my job is to teach you how to look at the daily price action in order to establish this trade frame. And that includes what to do if that thing had failed through your stop and through the support level here and the low of the day, which is nothing more than collapsing dragon opportunities to the downside using the same amount of risk. And there's a 4-hour trade going this way if this trade fails. So now what I got is a compound critical state with a 4-to-1 reward to risk ratio in both directions. Check or hold. I take the standard exit because I want to make 1R. It hit my PSAR, so I get out and I cash 1R. Am I disappointed? I am not. But I'm also ready to re-enter if it makes a new high. So I just get right back in and then I get right back out because it failed and I only capture this little sliver. On this one, I captured a big chunk. On this one, I captured a sliver. Important point, I didn't lose any money. I don't like losing my wife's money. And I just re-enter because it's a kata 2 and I get out because it failed to follow through, and I get back in because it's a kata 2, and then I get out because it's near the end of the day. So in that little trade series of 4 trades on Devon Energy, I captured this much on the first trade. I captured a little sliver, and another chunk. When I stack all those pieces together, I look back at this thing and say, hey, Ken, how come you just didn't take that trade on that unit of risk and then exit up in here? Well, the maximum favorable excursion compared to my 1 unit of risk was 1, 2, 3, 4, call it 5. This had a 5R potential if I had perfect information, but because of reasons of temporary failures, I took prudent businessman exits, and then upon the resumption of the trend, took prudent businessman reentries, and I never lost money. And if I stack up what I earned 1, 2, 2.5. So out of the 5R potential, I earned 2.5R. That's a 50% efficiency. And you know what you can do with a 50% efficiency? Make a living with no overnight risk. That's what you can do, because you can do that on 30% efficiency. So if I can get 50% efficiency, that's actually a really good day at work. And I see the glass is half full, not half empty. And all I need is 30% efficiency. Hey, what if that one I was not as fortunate and it scratched and it scratched and then I got discouraged and didn't even take that trade? Well, then all I get for today is I risked $100 and I made $100. Or if I risked $400 on the position size, I made $400 in 60 minutes. If you risked $100 and in 60 minutes you made $100, you're making $100 an hour. You do the math. no overnight risk. This is connected to the idea that we talked about at length in the foundation's Q&A for max pain range compression. Joe asked me, I had mentioned earlier about going from the 3-minute to the 30-minute. Why did I not go to 30 minutes? If you recall from my original review of the 30-minute charts, I did. The 30-minute chart on Walmart was this one, where I decided to keep that as a swing trade was when price breached, it went across the Bollinger Band main, the river and the dragon and the PSAR are sloping up, and I had a risk-free entry at about 161.70, and I'm using a 50-cent risk as a swing trade. That triggered me to go to the 3-minute chart. I'm always on the 30-minute chart. Every one of these symbols that you saw me brief, I'm always on them on the 30-minute chart all day. The ones that start working become 3-minute charts. And then this thing became this 3-minute chart trade. So the day trade on that one starts. No, that's Devin. Sorry. Where's my Walmart? There's my Walmart trade. There's my entry at 161.60. That started off as a 3-minute, as a 30-minute chart swing trade entry. And I drilled down and looked at this thing and said, oh man, there's my 2-hour battle drill. It's now a 3-minute intraday turbo. So I got 3 positions onto that intraday and then I exited the day trade positions here, but I kept the swing trade position because the 30-minute chart looked good. The 30-minute chart looked like that at the close. I'm not afraid of holding that one overnight. Answer the question? All right. Let's look at the traders. So this is where the traders are posting their charts for coaching in our live chat room, or asynchronous chat room too, I should say. They post their charts in there and we pull them up to take a look at their work today. This is Ilker on Tesla. He plays the Theta 2, correct. Standard risk to the bottom of the PSAR. Takes the exit. Does not take the subsequent Theta 2s. It walks out of it on 1-minute bars with 1 bar in 20 minutes. So he gets whatever he risked back, plus that scoop in 20 minutes. On Apple, he just gets the first leg, standard entry, 2R, and there was another 4R available, so re-entry. Now, if you're not prepared, don't trade it. This tells you the cost of not being prepared is 4R. So preparation is key. More importantly, professionally, he did not trade what he was not prepared to trade. He traded what he was prepared to trade, and it came right back into the resistance. He's entitled to believe that's all there is for the day. So important lesson learned. -1 on the normal chop for Hamad inside the Euro Kiwi. +2 on the Euro Pound, taking advantage of the channel in his favor. All good and all correct. Devon Energy, scratches inside the chop. The trade that I showed you happened after this chop was over. He's trading on a different time zone than me, though. Tesla, I'm sorry, NVIDIA, he grinds out 1.2. Beautiful entry right here. Nice job getting the early move. Pfizer, he grinds out a 0.6. Perfect. Grinds out 0.9 on Rivian. So he's able to make money in today's market in both directions. Net scratch for what is this? In the afternoon for Tesla. Mexico, a fractional win. Fractional win in Boeing, but there was much more available. But again, he wasn't sure what to do, so don't trade unless you are well prepared and you have time, will, pattern, and money. This afternoon portion right here was in conjunction with a very strong move inside the market, and we knew that Boeing was one of the most oversold gainers. So when it's rising and it's above the VWAP and the market is supporting, that becomes a low risk entry. Here is Satya on AMD, and he brings home 6R and doesn't even get the second leg up in the afternoon. Perfectly played all the way through and not trying to over position size. And so he doesn't even get this leg or that leg. So that might have even have been 10 today. Nice work. George quickly exits GBTC. That was available on the downside in the currency itself. We can't short GBTC or ETH, but he doesn't stick around too long. And here's the case where the wider stop allows you to take just a measured move that is less than 1R. So that's very well done. This is one where the stop and reverse pays off and the PSAR flip, and you saw the move on DIA. Yeah, I think you got to be prepared for that kind of a move because of where it was located inside the 10-day and the daily charts. So I want you to listen carefully to the coaching session I did with the foundations guys on the previous 90 minutes. I'm going to add it to your small group coaching because I really want you to concentrate on the lessons that are in that lecture. So add that to your task list for this week. And then good job avoiding pain and suffering here in Alcoa and getting what was available. There was more available, but I also appreciate waiting for the PSAR to flip before you get short. This is a much more aggressive short, and I trade that because Alcoa has been on my top 5 trading list for 30 years. So that makes me prone to trade Alcoa a lot. But that's a good move, and you got what was available. You gave it an opportunity to fail further, but you preserved the win. So that's really well done. All right, let's go to the daily report. Let me go back to, I'm sorry. Sorry for all the jumping around. All right, so this is our daily charts looking at the 150-day look back. So there's 5 days, the last 10 days, the last 30 days, the last 150 days. So the 150-day, 30-day, 10-day, and 5-day highs are all made right here. And you can see the powerful move that has moved up here. And then the recent sell-off, which has reversed with higher lows and is starting to move higher. And we are testing all the significant highs. And so the breakout above 488 could be like blowing the lid off of this pressure cooker, which has been building pressure. Is it going to fail? Is it going to suffer? Or no, if it breaks out, that could be the release of great energy for the new year, and off it could go. So tomorrow, as a Friday, is going to be very interesting. What are guys willing to hold over the weekend? And so if we zoom into just the last 30 days, which is that black box, oops, get my annotation back here. So if we zoom in and just look at the 30-day box and the 10-day box in closer proximity, we see this little support level after a strong sell or buy, it sold off to here, made a run up to here. It tested this, it sold off for 2 days, and then yesterday's afternoon plus today's move brought it all the way back up to here. And now it's testing that statistical high. So if it gets through today's high and then this 150-day high, this thing is, release the hounds. That could be the explosive move. But if this fails here, like guys are not willing to break through and hold it over the weekend, could that happen? Well, the last 2 times that it got there, it sold off to here and sold off to here. So if this rejects tomorrow and comes back all the way to 470, we're not allowed to be surprised. That's a minus $7 move, which would be minus 2%. A move from here to here would be minus 2%. And that would be a routine sell-off, not unusual. So for us, as long as the PSAR base holds and the 10-day base holds, then the upside move is still powerful. It's not unless it breaks below the 10-day low that we would be worried about a return to the 30-day low, which was all the way back here. So this is the last gasp of support, the 10-day low, the 5-day low in PSAR, the belly of the dragon, the 1-day low. All of those are support levels. And this gives us the cushion to be ready for a move tomorrow. So pick the level of risk that you want. But tomorrow, as a Friday, so we've had a lot of trading activity in here. There was more things happened in those 4 to 10 days than happened in the last 30. The last 30 days have been just strength, and now it's tactical sword fighting and grappling. So that could feel chaotic. So that means that all week, Monday, Tuesday, Wednesday, and Thursday, was some chaotic trading. And so now we're going to see what are they going to do on Friday, knowing that for Saturday and Sunday, there's no trading. And now that's 72 hours of news. So there's a certain amount of uncertainty holding things over the weekend. So that makes Fridays often a very tactical kind of trade. It could be quick sell and then boom. It could be big gap up and then sell off. It could be routine open and then just routinely glide north or glide south or just hold sideways. So there's at least 5 different reasonable scenarios that can happen on a Friday. So Friday for me is always tactical trading, especially when it finds itself so near the top of a really important price level. This is a compound critical state, according to our theory of market condition, and that makes tomorrow especially interesting. Plus, it's a Friday. And plus, technology was hugely strong today, and that could be all the trigger we need to see an explosive move up tomorrow. So how do we know that? How do we know it's that kind of a day? Well, look at the daily report. We are in bullish normal. That's good for the long side. We are dramatically overbought on every look back period: 2 day, 10 day, 30 day, 90 day, 270 day look back. They're all in the upper 10% of their trading range, and that's very favorable. And you can see that here on the 10 day look back. It's pushing to new highs. The risk of volatility is right on the borderline, so that a surprise big move up or down happens when it is close to the zero line. And you can see those spiky moves can be very surprising. So it says, be careful, only risk your speculative breakout money. And we already know that because it's a Friday. We know that the ones that are closest to their 10-day highs are Microsoft, Walmart, Cisco, Coca-Cola. Those would be my default starting positions tomorrow, especially if tech works. Microsoft could be amazing. And we already see that XLK and the Qs are in the minimum pain positions. That means tech is leading the way and is the least controversial leader for tomorrow. So we'll be ready for that. So you already have enough information to be ready for tomorrow. But we'll keep looking. What were the big breakouts today over that made new 10-day, 1 month, 3 month, and 6 month highs? Well, one of them was Microsoft. That's the clearest sign of market leadership that you could possibly have. Oh, and also NVIDIA. What were two of the symbols that I had good success on today in swing trades that I was willing to hold overnight? Microsoft and NVIDIA, and also Walmart, which made a 10-day and 30-day breakout. So those are the least controversial potential leaders for tomorrow because tech is strong. They're all tech, a little for Walmart, to be honest. But those are the first two places I'm going to look for strength in tech. Easy to add to that position. So what do the ETFs tell us? Well, I should also say, in terms of value trades, everything that is highlighted in that column is better than a 2-to-1 reward to risk. Just using our auto frame or reward to risk ratio, go listen to the 90-minute lunatic briefing from the foundations course from earlier today to see the significance of that. But if you've been here any length of time, you know why that's important. And you know how to trade it. So when we look at the ETFs, the tactical summary, we see the big breakout was in the NASDAQ and XLK, the S&P 500 technology sector. They made new highs for 10-day, 1 month, 3 month, and 6 month period. That means no matter what it was doing during any look back period, today was a big breakout to the upside. And old school tech at a 126 was stronger than NASDAQ. That tells you Microsoft, Cisco, IBM, Apple, those are the ones of the world that are going to do well. But we also had quite a lot of other members of the world making very favorable reward to risk ratio trade frames today. They have a lot more room to play catch up. So that's all good. If we use the auto framer itself and just cut right to the chase, we can refer to the reward to risk ratio, which is the default sort, and use the end of day framing data to set up trade frames with that kind of reward to risk ratio. Standard work, swing trading 1 day at a time. I teach it in the foundations course. If you add range compression on the daily bar, you find out that today's range expansion was large enough that only Walgreens is squeezed tighter than 2 to 1. But Microsoft is squeezed to 1.9. So if you're nearer the top, that means today's range was relatively small compared to the potential reward of a big breakout. And Microsoft is almost 2 to 1 if it gets a breakout above its range. So that is the clearest signal of all that Microsoft is my number one primary trading target for tomorrow. This one takes our swing trade portfolio and ranks it by reward to risk ratio. And you can see that the ones that had the best moves today, those technology ones, they're pushing near their 10-day high because of the strength of the move. So their reward to risk ratio of testing the 10-day high is 0 because they're already there and ready to move beyond. Whereas things in the energy sector like Devon Energy have a 6 to 1 reward to risk just to get back to their 10-day high. So if you took today's risk in Devon, there's 6 of those daily ranges just to get back to the 10-day high. But Microsoft is already there. So he doesn't have to climb the wall of worry. He's going to explode and go to new all-time highs, and there's less risk for some people with that kind of trade. So what I like are the ones that are at the extremes of this column. These are already the clear winners, and these are the ones that have the most recovery room back to their fair value. So this is deep value. This is already breakout and explosive growth. And you can see that the market, which is highlighted, is closer to the breakout condition, which is why I am going to favor the things that are leading the way towards the market breakout. That's everything I want to cover today. This one shows you, as always, the ones that have the combination of the largest average range percentage plus the greatest consistency in achieving that. And look at Intel, NVIDIA are very high on that list. Microsoft is pretty good. That's why I like some Intel and NVIDIA. And Texas Instruments, if you like that as a semiconductor. That's good. All right, fellas, that's everything for today. We'll get this published and processed. The combination of the Foundation's Q&A plus today's review of the daily template should go into a playlist that you put personally on your YouTube account so that you can easily find them and listen to them again upon demand. I would listen to those two every day for 30 days if I was really trying to master our basic bread and butter. That's how important they were. Take good care. We'll see you tomorrow on Tactical Friday.